Good morning, everyone, and welcome to the On Time, On Target Morning Brief, where we invest in fighter pilot precision on a daily basis. Lots to talk about this morning. As I alluded to yesterday, we're going to talk about gold and proper positioning of it in your portfolio. And again, you would only do that if you expect inflation to be increased. So I think we can all agree inflation is on its way up. The real question is it going to be a significant issue or not? Obviously, the jury's still out on that. I'm not ready to go all in on the fact that we're going to have significant amounts of inflation. But we're certainly going to have some. There's no doubt about that. So the question becomes, if you want to position your portfolio against inflation, gold's not a bad way to have a portion of it in there. I've always said up to 10% is fine in gold. You can use silver if you want. There's a precious metals ETF that I sorted through a whole bunch of them this morning to kind of pick the best one for you, for my clients, that if they want exposure to all the precious metals. So I've got that figured out. So that's how you can do it. Can you do it through Bitcoin? Well, I was thinking, gosh, we've been talking about it for a couple months. I was thinking yes, but now I think probably not. Let's just stay clear of that. Do the volatility. I mean, you're not going to see gold moving 20% in a day, right? So even if it turns out to be a fantastic long-term store of value and goes up over 100,000 a coin, it's still more of, we don't know if this is a fad or if it is here to stay. And if it is here to stay, is it going to be Bitcoin, or is Bitcoin going to be like the MySpace was to Facebook, right? It trudges the path and then something else hops in and takes its place. So a little too much out to be able to use Bitcoin as a store of value, but precious metals, sure. Now, the downside of precious metals are they're a commodity. It's not a company. It doesn't have a product or service, certainly doesn't pay a dividend. It just is. So you get into, when you're in commodities and the thing just is, you get into that, well, it goes up if people are willing to pay more for it, and it goes down if people that are willing to pay less for it. But it's just hard. It's almost a dart throw as to what precious metals are going to do, other than in an inflationary environment. Excuse me, an inflationary environment, they go up, and then of course when that subsides, then they go down. So that's what we're going to talk about today. We also have the Republican version of the infrastructure bill that just came out literally 5 minutes ago. So I don't know what's in it yet, other than it was below $1 trillion. So, the kind of aesthetically, it seems cheaper than above $1 trillion, which obviously that's a fact. But, it just doesn't seem like we're doing the hyper spending thing. But we'll see. We'll see what comes out of that. So that's what we've got for today's show. As far as the longs and shorts, those are in the room. A couple of good ones this morning, so I do expect those to hit, but we shall see. If you're catching us on replay, thank you so much for checking us out. Make sure you subscribe and hit the notifications bell. And if you want to join us live, it's $25 to come on into the room. We've got a question Q&A window and a chat window that you don't see on the screen. People can ask me questions and I will answer real time. With that, let's go ahead and get started. Welcome to today, Thursday, May 27th, one day until the end of May, and of course the big weekend that's coming up. Hopefully you have a big plans. All right, obviously markets close Monday, so it won't reopen until a Tuesday. All right, make sure you have your Q&A and your chat window set up appropriately. Panelists and all attendees selected as well. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at OTOTnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. Today's topic is 100% about protecting your money. You're not really buying gold because you're speculating on the price of it to go higher. You just aren't. Now, you want it to go higher. That is for sure. You would love to buy in at 1,800 or whatever it is now, and wake up tomorrow and it's worth 2,100 and slap some high fives. But then you're in a problem, right? Because if you're buying it to make money on it and you make some money on it, then you're going to end up selling it, and then you don't have any of that protection that you bought it for. Right? So you kind of need to, before you buy something, have it straight in your mind as to what exactly you're buying it for. If I'm putting it in your portfolio as a portfolio manager, I'm buying it for protection. If it goes up, fantastic. I'm not concerned with the price. I'm not looking to sell it. I'm buying it in case there's runaway inflation in the next 1, 2, 5 years. Right? Which would be a big problem because that causes all kinds of other issues. But that gold portion or silver, precious metal or whatever is going to sit there and serve as a protector of a certain amount of capital that you have allocated to it. So, and you should hopefully make money along the way, but that's not why you're in it. You're in it to protect capital. So that way you need to understand that. Same thing with bonds, kind of operate the same way. You're not trying to make a killing, otherwise you wouldn't be in bonds. But if you're in bonds, you're trying to protect your hard-earned capital from losses. So if the market starts heading down, bonds tend to head up, and they might be worth more, but you really just want that solid protection out there. All right, so why invest in gold? I would say 100% it's as a hedge. If you do want to invest in gold because you think it's low and it's going higher, well, that's speculation. Now you're not using it as a hedge. You're using it because you think it's going to go up. So a little different. What other precious metals out there? We kind of show the chart every day, right? We'll pause a little bit longer on that chart today to talk about what precious metals are out there. As far as you can look down a little bit, we'll look at the way to own these things. You can buy them outright, sure. You can buy them through ingots. You can buy them through coins. You could buy it, and throw them in the safe, that sort of thing. You can pay a premium for a coin because obviously the aesthetic, minting and all that. But for the ingots, not so much. They basically travel at the spot price, if you will. Or you can use an index fund like GLD or SLV, which are obviously gold and silver. GNR is the ETF that I would throw out for you if you want exposure to all of them. I don't think you need exposure to all of them, but if you want exposure to all of them, that's my recommendation. Check out GNR. It's pretty cheap. You're going to have all the metals. All the metals are great, right? So if you want that, that's out there. All right, as far as the flow today, long, short, open, short, long, we'll do a little market review. We've got a jobs number to talk about. We've got the infrastructure bill, bunch of hostile takeover moves at ExxonMobil. It's like, whoa. So some ESG stuff to talk about this morning in the headlines, and some earnings out there. And for our short-term execution, Beyond Meat had earnings, and I can't remember his earnings. They're releasing a 6-pack of their veggie burger, if you will. So that's exciting news. And also, it's kind of a Reddit play. There's a 20% short position in Beyond Meat. So if that starts getting targeted by the Reddit crowd, that thing could not only just go higher, it could scream higher, just like you've seen AMC and GameStop do for no reason other than the short float. You've got VAR with a pharmaceutical company with a new drug out there. You have PACX, which is a SPAC for the Acorns app, is going public through a SPAC. So if you're familiar with Acorns, round your sense. Those are the longs, shorts. You got a couple CFOs quitting in OTOT and Plan, as well as some negative earnings. And then LIZI is just a broken chart that should end up being short today. Significant. It's already down 6%. All right, let's go ahead and take a look at TD Ameritrade real quick. Here's what I have set up right now. I have 2 longs, Beyond Meat and PACX. Weird move here in PACX. So I don't quite understand it. So we'll probably bail on that one because that chart doesn't make sense. But then PLAN, the only down part about PLAN is, of course, it's sold off pretty significantly. It's out of our 10% range, so we'll probably bail on that too. But that's my initial look anyway. All right, here's where we are in the market. Kind of in that congestion area. We've been, going through that right now. I don't expect that to change. I think we're range bound here for a while until we really get some real feeling of the tax plan, right? So everybody's happy. So that means market goes higher. Everybody's worried about inflation and taxes. That means market goes lower. So that kind of nets out to us being kind of right here in this range, if you will. I would not expect huge moves in the overall market. As far as the past 5 days, really sort of the same sort of story. So it's just kind of chunking it out here at the at this level right? So I'd expect it to do that probably today and tomorrow. I don't know, maybe Friday before a big 3-day weekend, people might be giddy, especially if there's a good number out or something. But other than that, I expect the market to just be kind of flat and boring, and flat and boring is okay, right? All right, so let's look at CNBC real quick. We go back here, refresh the futures. You see the Dow and the S&P are barely in the green. Nasdaq's on its way up. Again, good jobs data is what's coming in here. We'll get back to that here in a second. EU mixed and pretty light trading, nothing much there. Same with Europe, really not much going on. There's our numbers from yesterday in the green, a little bit across the board. 10-year popped a little bit back above 1.6. Again, we're not really worried till it gets 1.8. Oil sold off slightly, but still above our range. All right, here's where gold and silver are at, almost 1,900 a share. It was down at 1,700 not too long ago. We'll take a look at that chart. But yeah, and then silver up at 27. If you remember, I remember silver being in the mid 30s. Somebody said the other day it got to 40. I don't know if it did or not, but they probably did, because they wouldn't have said it if it didn't. But I don't really recall that. But I do remember it being in the high 30s for a long time. So I think, yeah, these have room to move. Obviously, if inflation is your story, or if inflation is your concern, say you're a retiree and you know what, you're just like, inflation's my number one threat to my portfolio, then yeah, put 10% into precious metals and don't touch it. Right? Don't outthink yourself. Don't buy it and then sell it. Just buy it and hold it, right? Until you're not worried about inflation anymore. If you want to get into copper, you can. Now you're mixing hedging and inflation offsetting with speculation, right? So if you find yourself like today, because here you have 5 precious metals today, if you spend the next 2 hours digging through which one's the best, you're speculating. Right, you're not hedging. So hedging, just stay gold or silver. I'd prefer gold there, and then move on. All right, FX, won't worry about. Bitcoin bouncing up, it's above 40,000, and the rest of them are on the way up as well. Not as negative as last week. All right, let's talk about this jobs number. So again, the jobs challenge in the country is a lot of people are at home, not really interested in going back to work necessarily. Again, the rules are set up to where you have to be out actively seeking a job, and reporting that you are, so you don't get unemployment if you're not actively seeking. So those are the rules. But people being people, and I get that, are probably, there could be potentially phoning that in and just kind of not really seeking the job as much as they could be, because a lot of restaurants are challenged with opening up because they can't find labor. I've been in several different cities. Finally, travel's dying down, which is good to get to be home. But I've been in several different cities where Ubers are hard to find because people just aren't willing to get out there and make only a little bit more than they would make if they were sitting at home, right? But this is a good number, so everybody likes to see good numbers for unemployment. All right, okay. All right, unveiled the GOP has their infrastructure bill. I don't know what's in it, but we shall see. I do know that Biden, I saw this headline yesterday, Biden dropped his student loan forgiveness effort, so that everybody gets $10,000 of student loan forgiveness. So I think everybody's kind of happy across. I won't say everybody, but I think people are happy across the board that we aren't just paying that random bill out to. It's just like that doesn't make a whole lot of sense. But anyhow, it's dead. It's not happening anymore. All right, here's your Acorns you're going public through a SPAC. I'm not really all that interested in it, other than maybe a trade, but I'll look more into it today. Crushing day for big oil. So what's going on at ExxonMobil? There's an activist investor. I just blanked on the name. Engine One, I think, is the name that's involved out there. Put it in the chat if you happen to see it. But basically, hostile move on the board of directors, taking either 2, possibly 3 seats to go in and really kind of change the way ExxonMobil does business. So another big hit for big oil out there. And then you have that combined with the next headline below is Ford's been on fire lately, and I don't see them executing quite to the same level that they do. I see it more like an IBM of talk a big game, but not much changes. But yeah, Ford's talking about going, whatever the number was yesterday, half the fleet by 2030, and then all the fleet eventually fully EV. An EV Bronco. Some things don't make sense to me. But if you do have the Cybertruck coming out, well, Okay, so maybe everybody's moving in that space. The point is, the move is definitely to EV over the old gas companies, right? So if you're still invested in gas companies, it's probably time to let those go and move on to yeah, right. Move on to the EV space. So comment in there from Apex. Yeah, Ford has retiree union benefits that can stifle their agility. That is coming from an expert. I happen to know his personal background, and he spent some time up in Detroit, so he knows these things. But yeah, I think that's, it's almost like the IBM model. It's an older workforce, very expensive workforce, and are they as nimble / productive as / innovative / all of that stuff to be able to go out and change the world and make all these huge changes? I don't know. We'll see. All right. Best Buy is out with some good earnings. Dollar Tree whiffed earnings, so they're on the way down. They're one of our short options today. NVIDIA popped this morning. All right, let's take a look at gold real quick in this chart, and then we'll get set up for the open. So here's the GLD chart. And you say, when you look at a chart and you see all this green, you're like, Steve, where were you 2 months ago? It's like, well, I did an inflation thing a couple months ago. Okay. And we talked about this specifically. When gold was down and around, in this range, if you will, you're like, hey, gold's an option if you think inflation's going to be a big deal. A lot of people do, and it's on the way up. Is it a good entry point here? Yeah, if inflation is going to be an issue, this chart is going to be a lot higher. Is it guaranteed to be an issue? No, just because you print a lot of money and do a lot of stimulus, inflation was not an issue in 2008 or 9 or 10 or 11 or 12 coming off of all that quantitative easing. So consider, it wasn't before. What's different now? We are seeing signs of inflation, obviously, but houses, lumber, that sort of thing, are going up. So, all right, let's switch over to the open. Yeah, if you don't like Dollar Tree, don't take it. But they beat earnings, but they whiffed their forward forecast. So anyhow, it's a negative overall print for Dollar Tree. All right, here we are set up. Give me a second and we'll get going. All right, good morning, everyone. Welcome to the On Time, On Target play of the day. We have 4 screens in front of you as we stand by for the opening bell. We have the S&P 500 on the left on a 1-minute chart. There is the opening bell. So overall, futures are in the green, kind of trending higher from a positive number this morning. My number one long here is Beyond Meat, which is up 5%. I do kind of like the entry here. So about $1.50. So hopefully it sells off a little bit, kind of establishes the bottom of the day, which right now is right here. I'm just making a note real quick because we may end up taking this real quick. So 135 would be the entry point based off of the chart we're seeing. I would like to see it settle in here real quick before it goes higher. All right, we have PACX is not up as much as I thought. That is the acorns. And then of course you have some profit taking here on plan. It's still down 17%. All right, get ready. And Beyond Meat long 135 is the entry. Boom, there it is. The snag. All right, 135 is your entry. 133.5 down here is your exit point. We're already at the 1R point. Again, it's $1.50 stop. You may get another shot. I mean, that was obviously a ridiculous run up there while we were talking about it. So again, 135 is the entry, 133.5 is lower stop, 136.5 is 1R, and that puts 139.5 as your exit. So let's back out a little bit here and see if we can get up to 139. We can't. So 138 is be your next R point right here. And then again, 135.9 is your exit. That's going to be when it's up about 10%. So we're kind of talking math the other day of the, where you take something, you need to have room for it to run. If you were over here on plan and you take, a 50-cent R here, you may be like, okay, 47.50, I'll get in at 46.50 and I need 3R to that. Well, that means it's going to be down like 25% on the day, right? So it's just too hard to get the gains you need to get to the 3R point. All right, so we're watching this again. 139.5 is your exit on that. PACX is not really moving, so we're going to get rid of PACX and look at our other long, which was VIR. You see the Dow's up 200. I just saw that headline. Okay, VAR's kind of busted. They were gapping up almost 10%, and now they're not. So that story is played out. So let's look at the shorts. DLTR, I see what you're saying, Berner, on the earnings. So the earnings are three components, right? So you have the estimate, which is what you're talking about, which is the true earnings, right? Here I can draw our exit point on Beyond Meat now. So up at 139.5. So anyhow, have that in, get ready, it may hit it. I would not hold any. I don't think this is going to go up 35% today, but it's certainly going to hit our stop right here, and then we'll be out. So back to the point, what was I talking about? Dollar Tree. So you have three things with the earnings. There's your trade, 139.5. You're out the door on the 3R trade. So what are we, 3 minutes into the day? Talk about the entry. 135. We were looking at some other stuff. We established 133.50 as the low, $1.50 on the stop based off $135, and then basically the entry. Even if you got a sloppy entry here, even if you had 50-cent slippage, obviously your numbers would still work because it made it up to 140. So if you do get a sloppy entry, either don't take the trade if you're just like, well, I don't like what I see, or accept the sloppy entry and then change your numbers a little bit to make the R's work for you, or use my numbers and just accept that would be a 2.5 R point, instead of the versus a pure 3. But overall, a good looking trade. All right, back to Dollar Tree. So there's three things, right? So here you're right because you looked up the numbers. Here's your 1.4 estimated, 1.6 actual. Okay, so that comes out though, but that's not the full story. You have revenue. Which again, if you think of the P&L, you have revenue, which is top line, which is money coming in the door. You have earnings, which is what's reported. That's the bottom line. That's your profit. And then you have your forward guidance. The issue, there you go, sloppy entry. Yeah, way sloppy, 89 cents, right? Well, I gave you no time, Apex. I was just like, hey, look at it. Here's our numbers. 135 is the entry, and I'm off talking to something else, and it smacks it, right? It's kind of like fishing. It's like a bass smacking that entry point, right? But yeah, you got it. Nice 3R hit. Okay, so back to like Dollar Tree. So there's three components we talked about. There's revenue, there's earnings, and then there's forward guidance. Well, that forward guidance, it must have been, when I talk about negative earnings, I mean the entirety of the earnings release. And a lot of times companies can beat earnings, but then guide down. And that's, I'm not going to peel it back because I don't care about Dollar Tree. But that's probably what happened here. And then of course you get to the phone call, which is here. And then the phone call did get some positivity after the, executive suites on explaining themselves, sort of thing. So it'd be kind of interesting. I was talking yesterday for a long time about the future of Anchor Star Wealth and whether it will end up as a public company. That would be over a decade from now, but it's going to be a private company likely before the end of the year. So if you're interested in buying shares of Anchor Star Wealth, I've got a lot to learn on this to be able to restructure. But obviously, my office manager starts Monday, so I can hand off a lot of tasks that really don't require my level of expertise. But sharing out the company, and that's of course going to be a precursor to an eventual IPO someday. But that's a good decade away. But certainly, once you share out the company, you're required to have shareholder meetings. You're required to have a board of directors, and you all have an investment council. So a lot of things will be standing up as my business matures from just me into a full investment firm, which is Anchor Star Wealth. So kind of cool. Learning a lot about that though. All right, Plan, never got that entry because it's down too far. It's too far gone. What were the other ones we looked at? OTOT, yeah, the CFO up and resigned. So, we didn't get this one, but certainly when you have a CFO resigning story, it opened here, $2.50 stop, and then man, you would have had to. You don't get that backing up at all really to be able to get that entry. So with the CFO resigning, I don't think I would have taken this trade. I would have, said I missed it. But it's CFO resigning, that's not good. All right, that's what happened with Plan, is the CEO resigned as well, and earnings. And then the last one, LIZI. Now there's nothing going on at LIZI other than the chart was broken. This was gapping down earlier, and now it's going back up. So again, if any attempt at trying to short this would have failed, obviously. And it didn't have any storyline to go with it. So, all right, let's take a look, get out of day trading mode and go back to long-term mode. What's up? Beyond Meat, you already know that because we just played it. Boeing's up 3.5. I don't know why necessarily, but I'll take it. We got lots of Boeing. I've been trimming Boeing, hopefully not prematurely, but it's run up a lot. We talked banks yesterday. Here's Bank of America and JP Morgan getting some love. I did not catch the testimony yesterday, but there was not any negativity from their testimony that made the news. So I guess it was blah, blah, blah. Let's move on is the way I take that stuff. XLF is obviously your financial ETF. So lots of names in the green here, a little bit at least. Let's go over to the negative side. Apple must be down because that's a call that's selling off there. MDB, MongoDB is a tech firm. AMC popped up 20% yesterday, is obviously being, if you will, manipulated, or not manipulated, that's maybe too strong, in play, I should say, with the Wall Street Reddit crowd. All right, Zoom, TQLB, Trade Desk. I really like Trade Desk for long term, even though it's selling off today. Same thing with GoDaddy, DraftKings. A lot of my favorites here are selling off today because they had, if you've watched the last couple of days, tech has made a resurgence. And you've seen that in your portfolio if you're staring at the overall results in it. So, all right, let's move on from this and go back to our topic of the day, which is back to precious metals. And here's what we're looking at. Again, this is Investopedia's version of all the different metals out there. Now, I would say as a lifelong investor, if you like this stuff, and I do, and what I want, and I haven't done it yet, and I probably should, is I want in my safe, which I don't have, to put precious metal ingots, which I don't have. So this is like dream stuff. At some point I'll do this. Have it all set up to where you can literally open the door to the safe and see palladium and all the different precious metal ingots there. Coins possibly, but I kind of like the pure plays there. People who've known me for a long time know that. But yeah, I kind of want that stuff kind of on hand, not for any other reason, just to have it because I think it'd be kind of fun. That's the only reason. But that stuff obviously has value over time. Also yesterday, I was having a meeting with somebody last night, and we talked about long-term stores of value in art. That's another way to fight inflation. It's not the topic of today's precious metals. You can also buy art. And if you buy art as an inflation hedge, you're buying it, you're not hanging it on the wall. You're buying it, you're leaving it wrapped and sealed in its art package, and you're putting it away. You're paying somebody to store it for you. And that's all you're doing. You're not enjoying it. You are simply buying it to hold value. Not my type of thing, but that's the case. Yeah, gold with you in your teeth fillings. I don't know if that's still a thing. I know that kind of got pretty popular. 80s, 90s, whenever it was that came out. I don't have any gold in my teeth, and I do not intend to. Or I don't know. I do have a couple fillings. Maybe I think they're all ceramic now. No, I don't think they use silver anymore. Or insurance covers silver, but most people have ceramic, so it matches and everything. So, anywho. All right, platinum, I'm not always familiar with, or palladium. Those are higher end sort of stuff. All right, so I'm not really going to talk anymore about that. So, all right, good trade for today. Thanks for the comments. Congrats, Apex, on your trade there. I owed that to you after whiffing a couple earlier in this week. So good. So remember, that's the beauty of the system that we use is lose 1 R on bad days, make 3 R on good days. So therefore, you only really need 1 good day a week to offset, to even break even, right? Because there's generally a day we don't trade. But anyhow, if I shoot 50% on our trading mechanism, you're going to be up a ton of money over time, right? And just make sure you get in and get out and put stops in, so you don't let the math get away from you. But if you stay pure to the math, it's a fantastic system. All right, with that, we'll see you guys back tomorrow. And tomorrow I'm going to talk about 529 plans because it's 528. 529 days Saturday, but we're going to talk about 529 plans. Again, even if you don't have kids, you may have grandkids that are you can gift into these things. It's a really great way to grow money tax-free to be used for education. So with that, we'll let you guys go, and you guys have a good day. We'll talk to you tomorrow. Bye.